Good morning everyone, this is Iosif, analyst at IronFX, bringing you the morning comment for the 8th of January. US dollar recovers after NFP Friday. US dollar recovered rather quickly after a weaker than expected non-farm payrolls figure of 148k release on Friday. The low figure was not expected by most analysts, and it could be the case that the harsh winter conditions in the last December days reduced the pace of job openings. Later on, Cleveland Fed President Mester, which will be a voting member of FOMC, considered labor market as strong and job numbers as good. She sees a 0.25% to 0.5% GDP growth, adding to the optimistic scenario, and remarked that the Fed was not at a 2% personal consumption expenditure inflation rate yet. However, expectations are anchored at 2%. On the other hand, with no sign of inflation rising, the Fed should keep its powder dry, remarked Philadelphia Fed President Harker on a different occasion. He considers 2 rate hikes as appropriate in 2018, as there are no signs of the economy overheating, and considers that it would be helpful if inflation rose above 2% for a while. On Sunday, San Francisco Fed President John Williams, who has a vote in policymaking this year, mentioned that the economy is doing great. Everyone expects the Fed to raise hikes gradually, and 3 rate hikes in 2018 would make sense. White House official Iosif mentioned that there is no need for the Fed to pick up pace regarding the rate hikes in 2018 currently. The euro-dollar rose by 34 pips upon release of the US employment data, but quickly surrendered any gains posted and continued to trade in a consolidative sideways manner for the rest of the day and during today's Asian morning, between the resistance line of 1.2097 and the support level of 1.1940. We expect the pair to continue to trade in a sideways manner for the short term, with the risks tilted to the upside as there are a number of EU-related data to be released, among them retail sales of November, which are forecasted to switch to a positive sign on a monthly basis. Should the pair come under buying interest, we could see it breaking the 1.2097 resistance level and aim for the 1.2291 resistance. On the other hand, should the pair come under selling interest, it could break the 1.1940 support level and aim for the 1.1851 support barrier. Canadian dollar strengthens after a good employment report. The Canadian employment data for December were also released on Friday afternoon, with a surprise figure in employment change of almost 79k, and the unemployment rate dropping to 5.7% instead of increasing to 6% as forecasted. All this news supported the Canadian dollar on Friday and subdued the average to lower than expected PMI figures also for December. The strong employment data reignited discussions for a potential rate hike from the BOC on the 17th of January from 1% to 1.25%. It should be noted at this point that Governor Poulos, in an interview in December, implied that he is not going to pre-warn markets ahead of the next rate hike. The market currently has priced in a potential rate hike at 69.57%, increasing interest to future developments. We may see a more volatile CAD in the next 9 days, as the potential rate hike will hang in the balance. USD CAD dropped by approximately 98 pips on Friday, mirroring the double effect of weak US employment data and strong Canadian employment data. The pair broke the 1.2450 support level, now turned to resistance, and continued to trade at lower levels than before the data release, however above the 1.2350 support level. We expect the pair to continue to trade in a sideways manner, with risks tilted to the downside for a short term. Should the bulls take the driver's seat, we could see the pair breaking the 1.2450 resistance level and aim for the 1.2520 resistance barrier. On the other hand, should the bears take the reins, we could see the pair dropping below the 1.2350 support level and aim for the 1.2250 support area. For more information, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Peter Iosif, analyst at IronFX, wishing you solid trading.